Welcome back to Golden Rule Radio. Tori, what do you got for us today?
Well, in terms of the weekly recaps, good to be back, you guys. Last week we recorded at 2,331 on gold. We're 2,298 today. That's down 1.4% from our recording last week. Silver's down 3% though. So last week we were below 30 at $29.71, but now we're below 29 at 28.86. The other two white metals are the opposite trend, however. Platinum's up 3%, palladium's up 2.6%. Again, this is week over week from last week's recording. So we're over 1,000 again on platinum at 1,020, palladium at $949, up from $924 last week. And platinum, I mean, that's a big move, $988 last week to 1,020 now. The exact opposite 3% swing from what we're seeing in the big move down in silver.
Yeah, and a decent move down in gold.
Yeah.
Breaking below 2,300 psychologically. Miles, where is our base here for gold?
Well, I think we're kind of coming into it now, at least short term. You know, if you just look at the breakout move up, you know, where we started back in March when we blew through the previous all-time highs, and you just look at that kind of leg of the move up. We're about a third of the way back, so we're at the 382 fib right now. I would argue that we've put in a little bit of a floor here between about 2280 and 2290. We've had a number of touches in this price range going back to April. We had one in May, we had one in June, now we're having one at the end of June again. So we'll see if we get a turnaround here at this point, but I would argue if we don't see gold up in the next day or two, we probably end up looking at a little bit of a slide back downwards. And this gets into the conversation we had last week discussing some of the lower moving averages that we were at. Now, I don't know if we go all the way down to something like a 200-day moving average, but I think we could definitely see a couple things along here that line up with some previous price levels. Personally, I think 2200 in the 2200 range is probably my favorite number here from a pullback standpoint, because that short-term range I just mentioned from sort of start to finish of the real push in the bull market starting in March, that's your 618 retracement. But then if you zoom the chart out a little bit, that's also right where your first 382 fib retracement would be. So those two lining up there at around 2200, I think is a pretty strong floor and probably the first place. I would be looking to do some additional buying on the way down, and possibly the type of place where you could see us move towards as we get closer to the election season and debate season, and just some type of political motivation that encourages people to maybe start buying gold again as we move into later summer into the fall. So 2200 would be a dream, and what's scary about that is A, that's still significantly above the previous all-time highs, and B, that's an incredibly shallow correction to begin with. So gold's still screaming. It's just the numbers are so big nowadays, $50 up and down is a lot smaller than it sounds. So gold is still incredibly bullish at these prices, despite already being down $150 from the high.
Well, it's also still really undervalued. I mean, it's not like it's appropriately revalued for the inflationary expenses that we're all absorbing over the last 5 years especially. It still has to price accordingly and should be well north of $3,000 an ounce. And interestingly enough, we follow John Williams a lot, shadow stats, shadow government stats, right, where you can get some accurate reporting the way that the CPI, for example, used to be measured back in the early 80s. But in 1983 is when it all kind of started. But the Chapwood Index is a neat cost of living increase index that will track the actual costs on the top 150 items that Americans buy in the 50 largest cities. And that rose by between 8 and 13% last year. In 2022, it was more like between 12 and 19%. So that's the reality of what we're absorbing. But they can't stand to have the accurate numbers because they can't afford the cost of living adjustments in Medicare and Social Security and some of the welfare provisions that are out there. So get used to underreported inflation and get used to the continued tightening of your monthly household budget.
I need to go back and recreate the postage stamp inflation index, because in a couple of weeks it's going to be 73 cents for a first-class stamp. And that's the government running a business. So that's what reality is.
And that's a failing business. That's a business that's constantly underwater, right? They're coming up short on their own revenues.
Right. Yeah.
Even,
Yeah. It's not like other companies can go to Uncle Sam and say, we need
uh,
another few $1 billion to bail us out. But there's another thing that's brewing on the horizon. That is what is looking like a preemptive strike by Israel towards Hezbollah and possibly Iran. Tori, you got any information on that?
well, that is the concern, right? I mean, here, Miles, you mentioned what's going to be the news event or what's going to be the catalyst for gold reversing. We don't know where the floor is because we don't know when that news event comes out.
Right.
So, Miles, you mentioned politics, that this is certainly the year not just of U.S. politics, but 60% of the world is going through elections this year. So it's global elections. But yeah, Hezbollah, Iran, I mean, Iran is married to Hezbollah and vice versa, and there are rumors of them preemptively striking Israel and or Israel preemptively striking defensively in a sense to make sure that their Iron Dome system doesn't get overwhelmed.
Well, because that's the idea. I mean, Hezbollah has so many rockets, so does Iran. They can easily overwhelm the Iron Dome. So, yes, Israel is definitely gearing for a preemptive. We'll see how that plays out in the next few days.
Well, and it could be Russia. Here, they've promised retaliation for U.S. weapons being fired at Russian troops out of Ukraine, but that's another line in the sand that we've crossed. Now we're talking about sending American contractors into the Ukraine to be able to supposedly just work on repairs and advise and that sort of thing. But that's boots on the ground. Even though it's not our military, it's American feet on the ground in Ukraine, which again was not supposed to be happening. So all these things have continued to take these baby steps over the last 2 years that we've been talking about this. But what it could be, stock market crash. It could be an interest rate policy change. It could be certainly banks. I mean, banks are as unstable as we've seen since 2006 and 2007 into 8, the exposure they have to higher interest rates and commercial real estate.
Yeah, that's created what, 500 billion in unrealized losses for the banking sector already?
Yeah. And you've got more companies announcing bankruptcies, which is something you just happened to mention, where the U.S. Postal Service doesn't have to be held to the same account, but over 3,200 stores are expected to close this year. And that's a 24% increase from last year, which was bad. So that's a lot of commercial real estate vacancy, but it's also a lot of a hit to GDP between that and theft of stores, the higher cost of goods sold, margins, all of that. It's not a good economy. And people say it's a resilient economy. It's just not. And interestingly, the white metals are rebounding here, platinum and palladium, as if there's some economic demand. And there's not in the automotive section either. That sector is really hurting. But before we forget, we're getting off away from you here, Miles. Let's jump back to the silver. And, we've got a 3% decline with, a lower low now on this little cycle move.
Yeah, we're definitely seeing silver kind of put in some reasonable lows. In fact, we've kind of had this running channel of lower highs and lower lows going back to like May 16th, May 17th. Actually, I guess it was like May 20th that we peaked. So it could just be your normal kind of sideways to a slight downwards trading just to blow off some of the steam in that last move up in silver. But we are just like gold, arguably, we're down to that 382 fib currently and touching that here today. So personally, I like 27.50 on the spot price. I know that's not too much below where we're at now, and there's a really good price down at 26.35 that kind of lines up with some previous short-term and medium-term support levels. But I kind of like the interim here a little bit better, especially if we're going to continue the upwards momentum in silver. What I think is most likely in silver is just kind of more sideways. I think somewhere between where we are now and maybe a little bit lower, and it'll probably be pretty volatile as silver tends to be. We may get into a $2 trading range here for a few months. I think that'd be pretty reasonable for silver. So I'm not expecting too much more down personally on the silver price. And I'm probably just going to be slowly adding to my silver position over the next couple of months.
Well, the gold-silver ratio has hit 80 again. So remember, we started this spring at that high of 92. We came all the way down to 72. Now we've given a lot of that back up, and we're back to 80. Not in a no man's land. It certainly says buy silver here.
Yeah.
but depends on the underlying fundamentals. And so keep an eye on that. Meanwhile, central banks continue to add. You've got record, as far as the World Gold Council is concerned, in terms of their surveys. 69% of central bankers surveyed say they think the global gold reserves will be higher in 5 years. 81% think that they'll be higher in the next 12 months. So that signals rampant buying by central banks. So like we said last week, do what the ultra wealthy are doing, do what central banks are doing. They're not changing course. They don't see the road getting smoother ahead.
No, definitely not. And, I think a sideways move, especially for gold, is in the cards for the next week, 2 weeks. And then we'll see what kind of events can change our markets.
You kind of mentioned this a second ago, Tori, but platinum is showing a little bit of a rebound, so I'm glad you brought that up. Platinum actually is continuing to climb. Platinum's been climbing since November of last year, and it hasn't really stopped. So, in fact, you could almost argue the climb up is kind of looking a little parabolic, or it might turn parabolic. So, if that ends up being the case, how great would it be if we end up seeing a little spike in platinum, which, let's be honest, outside of the general reason why most of us own things like precious metals, which is the hedge against government overspending and inflation, platinum is industrial. And granted, industry may be lagging a little bit here, but we're talking about a metal that primarily comes from two places, Russia and South Africa. And neither of those supply lines are always, let's say, the most available. So we've been talking about this for years and years, and even more so since Russia-Ukraine kicked off. Global supplies are going to dry up, and there's not some magic well you can just go grab it out of when that ends up happening. So I'm not surprised to see platinum making a push up here. What I am surprised is that palladium seems to continue to be going down. We had a little bump in palladium, but the trend continues to be down. So it's just making that ratio look better and better.
Yeah, they almost got to parity. Yeah, good point.
Mm-hmm.
Yeah.
So if you're in it, stay in it. It ain't time yet. But I think that platinum palladium swing is going to look real good for those of us that have been patient in our platinum.
Yeah, I totally agree. And remember, it's still not even half the price of gold.
Yeah.
Remember, Rob? I mean, it was parity was a given. But
parity was a given. It was twice the price of gold, and it doesn't seem like it was that long ago.
No, it really doesn't. So here we go. You're not even to 50% the price of gold. Still a buy for me. It's a patient hold. You're looking at a many-year time frame before you may be rewarded for it, but it'll be a great ratio trade into gold at some point with a minority position of your precious metals. And follow the money and pay attention to the news. Again, we really have been sensing the bank sector being weakened and at risk. And now CNBC itself reported on a Claro study that over 280 banks could fail in the near term just because of those two primary fundamentals of commercial real estate loans and high interest rates. But meanwhile, the bond market is pricing in a 300 basis point cut in lending rates by 2025. And I just don't see it, spring of 2025. And so leave it up to the markets to overextend and overshoot in the wrong direction. But who knows, you guys, what's going to be the news event? What's it going to be? Too many of those scenarios to play out hypothetically here. But in the meantime, hold your gold. Buy. Miles, if we see 2,200, back up the truck, right?
Right.
Yeah, well, and just for fun, that ratio being at 80 today, if we see 2,200 on gold and we see 2,750, like I suggest on silver, that keeps the ratio right at 80. So that actually would be sort of the healthiest move we could see here over the next, let's say, 6-8 weeks, is keep things kind of right where they're at, because we know the long-term trend on gold, silver is down. We know we're heading that direction. It might take 3 or 4 years to get there like it did last time, but we know we're heading that direction. So your opportunities in the 90s, the 100s, the 120s, those are few and far between. So if you're not sitting on a decent silver position now, I certainly would be looking at one, because you definitely don't want to miss the swing down to 50 or 40.
In that gold to silver ratio, not the silver price. Yeah.
Yeah.
Yeah, not the dollar price. I mean, gold silver ratio. Forgive me, because that dollar price, 40 or 50, that's just getting back. That's just starting. I don't think people realize that $40, $50 silver is just the beginning for silver. We're not even in the blocks yet, let alone getting ready to run the race. So silver's still having breakfast. They haven't even put their shoes on yet. So one last thing before we head out, just a quick look at the dollar. Dollar index continues to climb and looking strong. So after the big initial shock, interest rates are moving run up, and then the early 2023 fall, we've definitely stabilized in the dollar and been in a pretty big, but at least consistent range. So dollar moving towards the top end of that range. We'll see if it has any legs above like 107, where it seems to be stalling out, but we're getting close on that. So I think the dollar's the thing to watch over the next few weeks while we're kind of waiting for the metals to reload.
All of that could happen at the exact same time.
Yes.
With a direct correlation.
It'll be fun.
And isn't it amazing that often it does?
Yeah.
Well, that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, and head on over to our website to find some additional information. We can be found at McIlvaney.com. If you'd like some quick snapshots from time to time, you can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And most importantly, if you want to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, you can give us a call at 800-525-9556. Thanks for listening and have a great week.